Hello, I'm Billy Welch, part of Mycelium, a core service provider to TracerDAO. Let's take a quick look at TracerDAO and how it intends to bridge the gap between crypto native and real world markets. Before jumping in, I'd like to spend some time on why I'm fascinated by blockchain infrastructure and the role it will play in changing how society interacts with financial markets. I spent the majority of my career developing new markets and supporting new technologies to help groups and communities better manage risk. This ranges from commodity markets like carbon credits and renewable energy to fixed income related products like mortgages and catastrophe bonds, also loan products, where under the direction of Dr. Richard Sandor, we created a transparent market-based interest rate benchmark after the fallout of the LIBOR manipulation scandal. With each of these markets, we were improving on existing infrastructure to increase transparency, reduce high friction costs, open access for new market participants to provide liquidity to help grow these markets. Blockchains and the infrastructure built on top of blockchains will make these past efforts of transparency, access, and fairness seem trivial in comparison to what's possible going forward. TracerDAO will be a major catalyst in this vision of the future by providing open source, secure, peer-to-peer financial infrastructure that drives innovation and opens the door for communities to participate in securing their financial future. Where TracerDAO is starting this journey is by developing and deploying a piece of derivative infrastructure that will allow people anywhere to manage risk. This ranges from digital communities, chain-link node operators managing Ethereum gas costs to provide continued service to the DeFi community, to local farmers being able to lock in the price for their crop, as well as input costs like water. How TracerDAO achieves this is through DAO structure, which at the protocol layer deploys a factory that allows permissionless deployment of markets, something that in traditional markets is not possible due to high barriers of entry, including high legal costs associated with negotiating ISTA agreements, which reduces access to only large market participants. Tracer's DAO structure opens governance typically closed in financial organizations by allowing community members to vote on the direction of the DAO. Anyone, whether that be individuals or organizations, are able to submit proposals to the DAO to change the protocol rules or even provide services like smart contract auditing provided by Sigma Prime, research and governance advisory from the likes of RMIT Blockchain Institute, the team at Bankless, or the organization I support, Mycelium, which provides software development, business development, community management, and other services to the DAO. We welcome anyone interested in contributing their efforts to come help us shape the future of TracerDAO. The factory setup within Tracer is fairly standard implementation within DeFi. It's literally what it sounds like. It's a financial factory that produces contracts. So if you imagine a standardized contract template, such as an option contract or a perpetual pool, a new type of financial contract developed by our team at Tracer, you can plug in contract inputs into a Tracer factory, and then anyone can deploy a new market. So if you have an Oracle price feed for that water market, let's say, you can plug that into the Tracer factory, press the create button, then a conveyor belt rolls out of the factory a new financial contract for anyone with an internet connection to access. I welcome people to go to our website and review our white papers to learn more. Something we're extremely excited about is a new primitive called a perpetual pool developed by our financial engineering team. This product is unique in that you can take a levered position and have no risk of liquidation and carry no margin debt. Holders of pool tokens can take long or short positions of a particular market and hedge price risk associated with that market without the fear that a large market move will liquidate your position or remove your hedge. These are fully fungible tokens that can be used across the crypto protocols like Balancer or SushiSwap or others, providing broad value across the crypto landscape. Since we launched this year on September 15th, total value locked is approaching $50 million and trading volume is well over $100 million. In this table, we compare Tracer's perpetual pools to other leveraged token designs. In version 1 of the perpetual pools products, traders can access 1 or 3 times power leverage exposure and do so in a low fee environment. For example, to hold perpetual pool exposure for 1 year would cost 1%, whereas on FTX it would cost nearly 11%, and on Binance, roughly 3.5% of total collateral. Additionally, through perpetual pools design, bankruptcy and liquidation is impossible. In V2 of our perpetual pools product, expected to launch before the end of this year, we're going to make even more improvements to leverage token designs. Volatility decay is a problem that exists across leverage products like ETFs and perpetual swaps, and makes it impractical to maintain positions for longer periods of time. V2 will mitigate the risk of volatility decay seen in leverage products to date, as well as create the ability for new markets to be deployed on a permissionless basis. The opportunity that these innovations open is tremendous. Blockchains and blockchain infrastructure will touch all global markets, and ultimately every financial transaction will settle on chain. This is an unimaginably large number, but I would argue that existing markets are only living up to a portion of their potential. By opening up low-cost infrastructure like Tracer, you create opportunities for people previously unable to access risk management infrastructure due to these high costs, and allow any market to be formed as long as you have a price oracle or data feed. For example, you're in the real world gig economy and you're looking to lock in fuel prices. We envision a world where applications like Lyft build risk management tools using Tracer DAO Perpetual Pools V2 to allow their drivers to hedge now, reduce exposure to adverse swings in fuel prices from supply shocks, and hold this hedge indefinitely to keep more income in their wallets to support their family. Or even in the digital world, suppose you're working in the metaverse like many people around the world who earn the majority of their income from play to earn games. A Hedge Now tool embedded into their in-app experience or as part of their participating in a yield guild has the potential to maintain their quality of life for them and their families despite market fluctuations in digital assets. One area I'm particularly excited for what Tracer can provide is around composability for underserved markets like water and environmental markets. In my experience, environmental and water markets are extremely localized. By allowing individual localized markets to be composable and swapped into larger composites, much like an ETF can be swapped out for the individual stocks that make up an index or vice versa, you can allow communities to hedge local price and supply risk with large entities looking to supply liquidity to a broad global market. Perpetual pools is where we started. We plan on launching the ability to create custom indices as well in the near future. Additionally, deploy other factory contracts for things like perpetual swaps, options, interest rate swaps, and many more innovative products to change the shape of financial markets. But we really can't do it alone. These are major problems. We welcome you to join the community by joining our Discord channel. If you're building an application where users can benefit from risk management tools or have an idea on a market or index, we want to hear from you. You can earn fees generated by these markets you help to create and be part of something that will truly change the world. We appreciate you giving our time today and look forward to answering your questions. Thank you very much.
Hello, my name is William Kirkwood and I'm the head of business for Mycelium Reputation. Today I will be speaking on behalf of Reputation DAO. Reputation DAO is creating a programmable reputation platform. Our aim is to shift trust from closed institutions to open source code. We are creating an independent and transparent reputation system for DeFi. And we will be providing reputation as a service. We will be an independent third-party service provider of reputation. We can create a trusted reputation system because we will be a decentralized autonomous organization that is controlled by the community. People will be able to trust our reputation scores, knowing that we basically democratize reputation. This is how we will shift trust from closed institutions to our open source code. So, what are the first applications for reputation? Our initial focus has been Oracle networks, specifically the Chainlink Oracle network. Blockchains are limited in their access to real-world data. Oracle networks offer a solution to this problem and have unlocked hundreds of billions of dollars in value by allowing the creation of lending, trading, and gambling platforms that operate using Oracle data feeds. For anyone that's not familiar, an Oracle network is basically a decentralized network of Oracle node operators who aggregate real-world data and feed it onto the blockchain and into smart contracts. We are creating transparency for users interacting with Oracle data feeds by allowing users to view the entire data supply chain that supports their smart contract data feeds. On our platform, users will be able to view any data feed and look at the entire data provenance and all of the different oracles that are supporting that data feed. We will also be applying reputation scores to Oracle performance. Our reputation score is a score between 1 and 100 that indicates how reliable and trustworthy an Oracle is. So, I'm just going to give a very quick overview of our current platform and all of our development up to this point. So this is our front end. Our front end is unique in that we support a variety of different blockchains. For this example, I'm just going to be focusing on the Ethereum network. So here, as you can see, we're ranking oracles by their lowest average deviation, and we can also rank them by their number of transactions submitted. We also support a variety of different data feeds and contracts. So if I just click in here and look at the ETH/USD data feed, I can see all of the oracles that are making up this data feed. I can also click and see all of the round results from this most recent round and any of the previous rounds. This enables users to verify any data feed and basically to ascertain an assurance that none of the oracles in the network are malfunctioning or operating in bad faith and significantly affecting the round result. We're supporting a variety of different contracts right now, and if you click into the Tesla one, for instance, once again, you'll be able to look at all of the different oracles that are making up this feed. Clicking into any particular oracle, you'll be able to see a variety of statistics around how many transactions the oracle has submitted and the average deviation in its responses. When we release our reputation scores, users will have a single source of truth to evaluate how reliable and trustworthy an oracle is. Our protocol visualization environment feature is this little widget here. Right now, it is live on Tracer's front end, and I'm going to just showcase how it works. So this feature is this innocuous little widget that sits in the bottom of a protocol's front end. Users can interact with it, and when they click it, it will take them to our website to an overview of the protocol's page. Users will be able to see a variety of different statistics specific to that protocol, and they will also be able to look into the protocol security of any of the data feeds, specifically looking at all of the different oracles that are actually supporting that data feed. This will enable users to have peace of mind about the smart contracts they're interacting with, and users can be assured via our widget that the smart contracts they're entering into are trustworthy and legitimate. So, looking beyond oracles, we've identified that DeFi needs reputation to expand its offering. This applies to a variety of different use cases, from protocols offering, more effective airdrops to their user base, all the way through to individual users being able to access, different services on chain, particularly around lending and liquidity mining. Reputation, however, is subjective, difficult to ascertain, and challenging to apply. And this is why there is no reputation system that has already been developed for DeFi. Our solution to this is data-driven, transparent trust. To do this, we've created a very sophisticated and scalable data pipeline. Our backend feeds in enormous amounts of blockchain data and creates an enormous data set for us to aggregate and analyze. We've then developed over the last 12 months with our research team a relative performance ranking reputation model. This model analyzes the data that we feed in on the back end and creates a score between 1 and 100, indicating the reputation of a protocol. Our decentralized governance structure also enables the community to vote and make changes as they see fit to any aspect of reputation. Because of this, we can align incentives effectively, and we can ensure that reputation evolves as the community sees fit. You can think about it as a democratization of how the reputation system for DeFi should work. We can also financially incentivize all of the stakeholders in reputation against corruption. We've built an agnostic, data-driven and programmable reputation model, and the Chainlink network is the first application. But in creating this reputation model, we have made it data agnostic so that it can scale into a variety of different applications. Chainlink is only the first application. We've also decentralized the weightings of any of the metrics as part of the reputation model. This means that the DAO can vote and change any aspect of how the model works. We've also set up the reputation model as a relative performance ranking. So it ranks you against your previous performance, but also against the performance of your peers. And in doing this, we incentivize competition and we create the competitive demands of a free market. We also encourage specialization. So if an oracle has particularly accurate results, that is something that will be rewarded. We have also made our model extremely scalable so that it can scale with the Chainlink network into the future and into any other application in DeFi. Right now, we've focused on Oracle networks, and we'll be releasing our full suite of Oracle products in the next 6 months. We'll then be moving on to keeper reputation and developing products for keepers. Later next year, we'll then be moving into externally owned address reputation, creating reputation products for individual DeFi users. In summary, we are creating an open source, programmable reputation platform, and we think that we can become an open standard for transparency and trust in DeFi. We see reputation as a public good that is extremely important to a variety of different functions in a complex environment. We have released our relative performance ranking white paper to our website, and we'll also be sharing our Reputation DAO white paper early next year, which outlines the rationale for why we have become a decentralized autonomous organization. So, please visit our website, have a read of our relative performance ranking white paper, and join our Discord to keep abreast of any of our future developments moving forward. Thank you.